Good afternoon then, and welcome everyone. This is technically speaking, how does Bitcoin actually work? And my name is Wojciech Rzadkosz. We've already talked about blockchain and mining, Bitcoin address and transactions. Today we'll talk about wallets and block explorers, and then we're left with forks, exchange platforms, tax and regulation, and best practice for further weeks. But before we start, I'd like to introduce you to Croat Green Park, where we are currently. We are a community-driven, not-for-profit co-working space with a very cool vibe and cool environment, I think. So if you got a business and you need a room for that business, come and check us out. There is the survey, again, just to let me know how I did, and I'll be sharing those slides. So if you leave email with me, I'll send them after to you. Q&A at the end as usual. So if you got any questions, just write them down. There's going to be about half an hour time at the end for that. So okay, let's talk wallets, Bitcoin wallets then. What is a Bitcoin wallet for? It's definitely not to store your Bitcoin. That's the first thing to get out of the way here. So it's not. If it's not for storing your Bitcoin, what is it for then? Well, a better way. Hello, yeah, coming in. Grab a seat. A better way to describe Bitcoin wallet. It's actually a blockchain interface tool. And it typically facilitates some or all of the following functions. It stores and manages your private keys, so not Bitcoin, private keys. And that's an important difference, because if it was storing Bitcoin, that would imply that if you lose your wallet, you're losing your Bitcoin as well, but that's not the case. It facilitates sending or receiving Bitcoin. It facilitates buying or selling Bitcoin. And it's a convenient way of displaying relevant blockchain data, like account balance, for example. So if obvious question here, if my Bitcoin is not in my wallet, so where is my Bitcoin then? What stores the Bitcoin? So this question is a head scratcher and a little bit philosophical, you can say, but bear with me. I'll try to talk you through where Bitcoin actually is. So if we start from your Bitcoin balance in your wallet, this is where you see your Bitcoin. But as we learned on the previous session, balance is nothing else but a set of or aggregation of unspent transaction outputs, UTXOs. Every UTXO can be traced upstream back to the Coinbase transaction. So if you follow the transaction flow, you'll always get to this Coinbase transaction. But the Coinbase transaction is just it creates actually a new proof of ownership when it releases Bitcoin into circulation rather than an asset. And the value around Bitcoin network is passed around by passing this ownership around, not the asset. That's a key sort of point here, and that means that this proof of ownership is commonly misinterpreted as the asset itself, but the asset itself actually doesn't exist. So the conclusion grande here is that Bitcoin doesn't actually exist. What does exist is those and can be stored is those proofs of ownership. And if you're thinking this is nuts, and who bought into this? Like how come this? How come there's no asset but just a proof of ownership? Well, think again, because this is how modern financial system works. Because currency used to be backed by gold. It was receipt for gold, and people were just using currency because it was more convenient than using gold in trade. But then in 1971, we lost the link to gold. And since then, people are just using proofs of ownership without the underlying asset in trade, and nobody's questioning that. So obviously, it is working to an extent. So in that way, Bitcoin is similar to fiat money. Right, if we want to compare Bitcoin wallets, There's a few ways to do that, depending on what criteria you are using. You can talk about hierarchical deterministic wallets as opposed to non-deterministic, and I'll explain a bit more what that means. You can talk about hot storage as opposed to cold storage, depending on whether it's online enabled or disabled. You can talk about full node as opposed to simplified payment verification, SPV for short, depending on whether there is an entire blockchain stored in this wallet or not. And you can talk about user-held keys as opposed to third-party custodian, or open source as opposed to closed source wallets. So hierarchical deterministic HD wallet is this thing where you can generate multiple addresses at the end there out of one mnemonic phrase. This mnemonic phrase is typically 12 English words. And only storing or only storing that is required in order to get access to all the funds that are on all of those addresses at the end. So those addresses are determined from a single mnemonic phrase. That's why it's called deterministic. And there is also hierarchy in there, because you can see there is this kind of parent-child relationship where you can, from the mnemonic phrase, generate master key, which then can generate multiple currency wallets, and then from every one of those currency wallets, multiple accounts and multiple chains of addresses. And note that the advantage of this, it can be used, for example, it can represent a corporation structure where you assign those different chains of addresses to different departments in a company, for example, and all of them go back to the mnemonic phrase, which is the only thing needed to recover all of this information. So it's a cool way to do that. Apart from the benefits already mentioned for hierarchical deterministic wallets, it's also possible to generate public keys without having access to their corresponding private key, which means that if you have like receive-only capacity servers or like insecure servers where you don't want to expose private key to online, you can achieve that with HD wallets as well. So it's quite safe as well. So applicability, it's basically a preferred wallet standard these days. None of the today newly being created wallets uses non-deterministic methodology, where that basically means that all private keys have to be generated separately and stored separately and managed separately. So it's a bit cumbersome. Although early versions of Bitcoin wallet did just that. Depending on whether it's online enabled or online disabled, the wallets are hot or cold. They're referred to as hot or cold, and the advantage of hot wallets is definitely it's very accessible funds. So hot wallet is a hot wallet on your mobile or on your laptop, and it's you can log into those hot wallets usually from multiple devices as well. So it's just a convenient way of accessing your funds, but obviously they're vulnerable to network-based attacks. So applicability really is daily transactions only. No large amounts are stored as hot wallet in a secure environment. An example, Bitcoin Core, Jaxx, Coinbase, or any other really wallet that you can download off a Play Store or iTunes Store, the iOS Store. Cold wallet, it's highest possible security, but somewhat cumbersome and inconvenient. Hardware electronic wallets are costly, but this is because it's the highest possible security. This is what you would use if you're storing large amounts. Example of the electronic hardware wallets: Trezor, Ledger, KeepKey. You can also use paper wallet, which is just a printout. It's free, and it's really, if you use it correctly, it can be as good as the hardware wallets you have to pay for. Or Brain Wallet, which is a cool thing, because if you say, if you have this mnemonic phrase, and if you're able to remember it, and then if you delete the copy of your mnemonic phrase for any other of your devices, so your mind is the only place where this mnemonic phrase exists, that means that you can store your value in your mind, which is quite cool. If you think about it, that's not been possible before. No one else can access it until they have access to your information that you're storing in your mind. So you don't need Vault anymore to store any value. Exactly.
You will enter that, even the information is in your mind, you will enter that somewhere to get the transaction
to recover
done,
it, yeah.
or execute the transaction. What about that time somebody else will pick it up or something?
But you can sign transactions offline, so you can generate the private key from this information. You can generate this private key offline, and then you can sign transaction offline, and then you can then you can distribute it to the network. So that means that at no point you're exposing your private keys online.
A new private key every time.
What do you mean?
So
from out of that information?
Yeah. I got it. Okay. Cool.
Yeah. So this is only the mnemonic phrase is the beginning of this chain of HD wallet addresses. So from that you can generate multiple, accounts, wallets, currencies, and chains of addresses. So it's very quite powerful.
Just don't get amnesia.
Yeah, well, that's why it's not very popular, because the infallibility of fallibility of human brain. It's I wouldn't certainly dare to try to remember something like this and not write it down anywhere else. But anyway, we can also divide wallets in terms of where the blockchain is stored on your as part of your wallet, or it's not. And the full node wallets store the entire blockchain, but it requires a lot of disk space, currently in excess of 150 gigs. But they're independent for transaction verification. So that is good for exchanges, miners, online stores, merchants, because they will be independent. SPV wallets, on the other hand, they're lightweight, so all their mobile wallets are SPV, but they rely on the network to verify transactions. That doesn't mean they have to trust anyone. They don't rely on trust. They just rely on the fact that the network is there, and there is some full nodes in the network that can verify, that can prove some information to the SPV wallets that they don't have, because they just don't have the entire blockchain. And so applications of that is really mobile clients, micropayments. Examples: Bread Wallet, Jaxx, Coinomi, Mycelium, again, all mobile wallets. And then talking about those SPV wallets, how do they achieve that, this trustless security while not having access to the blockchain? They could query the full nodes, but they would have to rely on trust. But as I said, they don't rely on trust. So there is this concept of Merkle tree that enables that. And this is, by the way, the only technical slide today, so bear with me. I'll try to walk you through how this Merkle tree works. So if you imagine a block of transactions, all those blocks in the bottom are the transactions in that block, from HA through to HP. Now, imagine that you add them into couples and hash those couples and receive, for every pair of transactions you'll receive a single hash. Then you can take all of those hashes on this level and again aggregate them into pairs, and then hash them again, and do that over and over again until you get to a single root. And that root is like a digital fingerprint of all of those transactions. So this root it basically represents those transactions. If you change any of those transactions, that root changes. So how this can be used, how this is used in Bitcoin. At some point, when the SPV wallets want to verify a transaction, they need to know if a certain transaction is in some block in the blockchain. So they can query their full node about that, whether this transaction is in this block. But the full node, in order for the SPV node not having to rely on trust, the full node can prove to the SPV node that this transaction actually is in the block. And the way to do that, they have to provide all of the, looking at the blue blocks now, all of the blocks, let's call it blocks for now, or no, because that would be confusing, but all of the pairs on the way down to the root, so the SPV wallet can go from this transaction down to the root using those pairs provided by the full node and get to the root. And if you remember from one of the previous seminars, roots are stored in the headers, which all wallets have access to. So they can get to that root with all this information, and they could check it against the record they have on the phone, they have in the memory. And if that is an agreement, then that's transaction verified. And this is a trustless way to achieve transaction verification in those SPV nodes, or rather, it's one of the things that SPV nodes do to achieve trustless transaction verification. Moving on, user-held keys as opposed to third-party custodian. So only way to truly own Bitcoin is to hold your private keys. If you don't hold your private keys, not your keys, not your Bitcoin, that's the golden rule. But with great power comes great responsibility. So obviously if you lose your keys, there's no company that you could claim your Bitcoins from or recover your passphrase or password from. So you are responsible for it entirely. Applicability, most applications really is user-held keys, because in most applications you care about true ownership of Bitcoin. So storing daily use. Examples: Bread Wallet, Jaxx, Coinomi, Mycelium. Third party is obviously in the positive side. Professionals take care of your Bitcoin. What can possibly go wrong? And that's obviously a tongue-in-cheek in there, because lots of things can go wrong and have gone wrong in the past, and people had difficulties recovering those funds because they didn't truly own them. They had to rely on those third parties to recover them. So there's few applications where this risk is kind of justified, like centralized trading. Most platforms, we'll talk about that actually next week, are centralized, and they require their third-party custodian, so they hold your keys. And actually examples there: Coinbase, Kraken, or Bitstamp. Those are the name of the exchange platforms. And then we can talk about open source wallet as opposed to closed source wallets. And this is again a bit tricky one. Open source wallets typically have significantly reduced risk of malicious action by the software vendor because they're open source, anyone can check them. But that's relying either on your skill to check this wallet or the community to check it for you. So you need to rely on some sort of trust in there. That's why, because they're open source, anyone can copy them and insert some scammy bits in there. So watch out for copycat scams. And there is really little choice of multi-currency wallets. The only one I was able to find is this one, Agama. So if you're looking open source, most of them, like Bitcoin Core Blockchain, Mycelium, they are dedicated to one currency, a single currency like Bitcoin, for example. Closed source, the positive thing is that company or even personal reputation is at stake. So if you know, for example, a person who runs a closed source wallet, you might be able to trust them more than you trust the community to check your open source code. But the typical advantages of closed source software like tech support or better user experience don't really apply to Bitcoin wallets because the open source projects can be as good. So application of closed source, daily usage, application of open source, lots of applications involving non-trivial money. So this is all confusing. There's so much choice in the Bitcoin wallet area. So which one should I use? I'm going to give you some rules of thumb, but there's obviously always trade-offs. Trusted platforms with third-party side private keys for day trading. Mobile wallets with client-side private keys for insignificant amounts. Desktop full node client if you're a merchant. Cold storage for substantial amounts, and cold storage with multi-signature address for large amounts and long-term storage. That concludes the wallet bit, and let's talk about block explorers now, what they are. Block explorers are an online, searchable, filterable, hyperlinked blockchain query tool. So some of the capability of block explorers is similar to Bitcoin wallets, but mostly they are so blockchain exists on the network and multiple nodes on that network. Block explorers are online gateways for querying those blockchains and querying into them things like transactions, blocks, input, outputs, and whatnot. This part is going to be very sort of practical, less theoretical. So I'm just going to show you examples of what you can do with block explorers just to make you aware of what they are and how they can be used. I'm going to use those two as an example today, but there's more if you're interested, and if you just Google block explorers, there's plenty more than that. So first of all, what you can do with block explorers, you can explore blocks. So that's really the highest level. So this is, for example, I was doing this slide end of August, so this is all the latest blocks at that time, and you can see height of theirs for every one of those blocks, which is just kind of distance from the first block, from the genesis block. That's what height is. And this is all clickable, so anything that that's blue is hyperlinked. So you can, for example, click on every one of those blocks, and you can examine what some information contained in that block. Things like hash of the block. This website actually has a funny way of showing hashes. It's just kind of color-coded way to shorten the hash. Instead of having a very long string of characters, they just shorten it with a color coding. So don't worry about it too much. Timestamp, who mined it, although it says it's guessed miner, because that's only guessed based on the Coinbase data, which the mining party puts in there themselves. So although it might be Antpool that put that information in there, it might be someone else as well. So other than that, we don't really know who's mining those blocks. But this particular one probably was mined by Antpool, which is one of the mining pools. And then transaction count, how many transactions, coin days destroyed. That's something you may come across and you may be wondering what that is. It's just really a way of measuring activity on the Bitcoin network. Because to measure activity on Bitcoin network, you could really follow the number of transactions. But if somebody was spamming the network with loads of transactions back and forth, they wouldn't be really making any real activity on the network, but you would be picking those up and they would be affecting your measure. So the way to overcome that is you can look into not just the number of transactions, but days, the time that the input in that transaction remained unspent for. So say you are spending from a wallet which you haven't spent for 100 days, and you're spending 1 Bitcoin. That's I don't know what the actual formula is, but let's assume that's 100 coin days destroyed, and that's an aggregation of those coin days destroyed in the block. So that's really a measure of how active Bitcoin network is. How many inputs, outputs, fees information, and some more technical data there, which I'm not going to go into detail. Going further, you can explore transactions in every block, and again, so this is the block that I was viewing earlier, and there's again, every transaction has got an ID and a hash, and whether it's a Coinbase transaction or just a regular transaction, which is all the rest of them apart from the first one, and all sorts of other information about every transaction. And again, this is clickable, so you can again go into a transaction and you can see things like date, again, coin days destroyed in this transaction, and totals of inputs, outputs, and some other technical details there. And obviously you can see the inputs and outputs as well, and this is again clickable, and you can go further and investigate what those addresses are and what, for example, what other transactions they received or how much Bitcoin there is in those addresses. So this is an example address which I found on Bitcoin network. It has 80,000 Bitcoins on there, which is totaling to about $500 million today, and this is its transaction sort of receiving transactions pattern. So you can see that he was accumulating them from 2011 onwards every month. First receiving transaction date, last receiving transaction date, and nothing was spent ever from that address, so the balance remains 80,000. So you might think this is a little bit too intrusive, that you can look into every wallet and see all the transactions that occurred in it. And in some cases it is, but you need to remember that those are anonymous. If everything's done right, there's no way of finding out who this address belongs to. So this is what the network relies on. The network relies on the fact that everything is transparent, completely transparent. And this is what sort of Bitcoin is based on. It's based on transparency.
But also, addresses don't equal people.
No, they don't.
You could have addresses yourself, or one address could belong to Coinbase, which means that there's the money of thousands of people.
Exactly.
Like probably in this case.
It might be in this case. It might be an address. It probably is some known address because it has this beginning here Feeks, which is not a random one. So exactly, it could be an exchange's address. And then you can do things like filtering. So with all the stuff that you can view on those block explorers, you can filter, and then you can sort them, for example. So I was filtering them for last month, and I was sorting by the amount of output, so how big the transactions were. And I highlighted there the transaction output compared to the fee. Pay attention to that and notice that this guy here, he sent $100 million worth of Bitcoin to somebody for 3 cents. That's quite cheap, isn't it? Imagine how much that would cost you in a wire transfer and how long it would take. Other things you can do with block explorers, network stats, so like average block size, transactions per day, mempool size is interesting because if you know that every block can fit 1 megabyte of transactions, and this is at 0.1 megabyte at the moment, you know that probably if you make a transaction and attach a very tiny fee with it, even the tiniest fee with it, it will probably make it to the next block anyway. So you can send a cheap transaction and be sure that it will be included in the next couple of blocks probably. Bitcoins in circulation, market price USD, market cap for Bitcoin, USD exchange trade volume, other stuff that you can do with those block explorers. interestingly, for example, you can see their hash rate distribution on their Bitcoin network. So from that chart, you can see how much mining operations those particular companies have as a share in the entire mining of Bitcoin in Bitcoin network. So they're open about it. And for example, there's somebody who's got 9% of mining operations, and they're not disclosing who they are. Probably John McAfee or someone. More things in the stats: hash rate over time, difficulty of the network over time, and other things like mining revenue, total transaction fees in US dollar, and cost per transaction or percent cost transaction volume. So there's plenty of information there that is open, and most interestingly free to access, so that none of those websites is charging any fees for using it. They just open access for everyone. That is everything for today. Remember about the survey, if you're kind enough to let me know how I did, and if you leave the email there, I'll send you an email with this deck of slides if you want. And see you next week for forks and exchange platforms. Thank you kindly for coming.